you. Hello everyone, good afternoon and welcome to today's Trading the US Open live here with the live trade room. And today is Tuesday the 2nd of October. So just to touch upon our approach, I guess, we're technical traders. We look to identify high probability trading opportunities and we look to execute and manage our trades with a certain degree of consistency and discipline in our approach, with a strong emphasis on protecting capital when we trade. With one aim, and that is to book in consistent returns by looking to cut our losers short as quickly as we can, but look to let our winners run. So that's how we approach these markets. So just before we begin, if we could start, as we always do, with our risk warning, please do, of course, familiarize yourself with our risk warning currently up on screen. Okay, so let's get in and we'll start with a quick review of potential market moving news. Now, this is important for traders to have an understanding of the news flow, just in case there is certain news events which could impact either the trades you're in or the trades you're about to take. So as a point of reference, every single trading session, do take note of the news events that could impact your trading. And as we can see, we haven't really had an awful lot today. We've had some news from the RBA in Australia that they're going to keep interest rates at 1.5. That was very much in line with consensus, and as a result, the Aussie dollar has sold off a little bit over the course of the day. So what we have to deal with, I guess, always when central bankers speak, the markets are listening very, very carefully. We do have an FOMC member giving a testimony. It's a released testimony text 18 hours earlier than is scheduled. So he's due to testify on the implementation of the economic growth. So again, the markets will be sort of looking for any suggestion and hints. And we also have the Fed chair, Powell, due to speak at the outlook for employment and inflation. So obviously inflation is an important factor for central banks, and it does influence their approach to interest rates. But as we know, the US economy is thriving. Unemployment rates are at very, very significant lows. We're virtually in full employment, and it's all looking pretty good for the US dollar. Now, that's not to say that we're going to get corresponding price action, of course. We have experienced a bit of a move down in the earlier part of the European session, and as you can see, we're currently experiencing what's called a late session reversal. We're going into the US session now, so there'll be more traders entering this environment from the US, likely to determine which direction these markets are going to move in, and we can act accordingly. What we've seen from the euro dollar is just a pretty strong reversal of that level. We're seeing reversals across the board, actually, across the Aussie dollar, the pound dollar, and the euro dollar to the upside, and that's just, it goes back to the importance of making sure that you manage risk effectively. Now, we were able to book in a bit of profit on the pound dollar trade, so we entered at these levels up here at a 29.90 level, and we were able to take profit down at this lower level. But obviously we're expecting these markets to continue lower, and we got a little structural failure. The markets bounced back, and then we got a double structural failure to the upside. So we're able to book in profit at these lower levels without getting the full follow through that we would have anticipated. Now, the euro dollar, we had the explosive move to the downside, and as soon as we made a bit of a thrust lower, we had a bit of sideways moving market for a while, and now we've got a little bit of a reversal kicking into the euro dollar. We're still below the daily, last week's low, which is the 1570 level. That's the all important level for this. Very likely to continue lower. But we've been talking a lot about this level in here, the 1524, in and around that level, and the potential for this market to reject that level, and effectively that's kind of what we've seen. So once we got the break to the downside and we got the reversal, we didn't want to hang around in this market for much longer as soon as those prices started to break above the 1524. So that's something that was a little bit of a concern for us, trading the euro dollar. The Aussie dollar, we're still in these markets to the downside on our daily time frame, but we had some structural failures to the upside and we broke even on this one. So effectively we've kind of ended up neutral across the 4 trades. We had a strong reversal, and we're still in that reversal pattern as far as the Euro stocks are concerned. So we've effectively broken even for the morning. That's all we've really achieved. Although we were in decent profit across these 4 trades at one very brief moment in this morning's trading. So some of the nuances that you'll experience from these markets are late session reversals. We've seen those across the markets we were looking in, and we were hoping to get to the European to the US session to see if some more strength starts to creep in to the US dollar, because it's very likely to happen. The pound dollar is likely to continue lower, so too is the Aussie dollar. So we're not suggesting for a second that these markets are kind of finished at these levels. Far from it. They might actually give us some better opportunities at a slightly higher price. So we shall have to wait and see on that one. But we really need to break the 71.61 level to the downside, and the 71.74 as well. So this is on a 5-minute chart, so we'll continue to look at the Aussie dollar to the downside. The euro dollar, we'll keep a close eye on it just in case we start getting structural failures lower. The pound dollar is an interesting one. We've almost got a head and shoulders now, don't we? So that's a little bit concerning. So if we look at this market here, we have one shoulder pattern followed by significant head, followed by what could be another shoulder pattern, and it could give us a reversal signal above this level to the upside. So we're looking at this level very carefully to see if we get these prices breaking higher. And as things stand, this has got a certain amount of uniformity in the way that this head and shoulders is setting up. It's kind of a mirror image to many degrees, although you could see it just extending that way a little bit longer before we get a move. So really a breakout to the downside below the 129.57 still stacks up, or a break above the 129.68. So this is a relatively short range, a 10 pip range, so nothing of any major importance, and we are looking at it on a minute time frame as well. So, but we are seeing the potential for a head and shoulders in this market, and we shall see. So we continue to look at the pound dollar market. And the Aussie dollar as well. So we're still getting structural failures to the upside in both the S&P, and this was the concern with the S&P, is that we were looking or potentially contemplating selling quite a strong market, and the problem is when you do that consistently is that you can run into these levels of support creeping into these markets. So definitely something to be mindful of. So we can still look for a breakout in the pound dollar to the downside, Also the Aussie dollar, see if we get into those markets again, if we get the break that we're looking for. Again, we've got a relatively small stop loss to use if we do get that opportunity to get into it. So we'll keep an eye on the dollar trade. Let's have a quick flick through some of these markets. A bit of indecision, but more of dollar strength than yen weakness as things currently stand. Not much going on in the dollar Swiss. Same situation for dollar CAD. We do expect the Aussie dollar to push lower. The New Zealand dollar just bouncing off its lows and seeing the same kind of pullback as the Aussie dollar. So we still expect these markets lower, but we'll see if we get those opportunities or not. The euro is now strengthened against the pound, but we still very much are firmly contained within yesterday's highs and lows. The pound yen is just trading up at these higher levels here, and we'll see if we get this rollover price action. We haven't quite seen it yet, so and we wouldn't necessarily want to be selling weakness with weakness either. So the rejection to the downside in the euro yen is the perfect reason why we wouldn't be selecting this as a high probability trade. The gold market is just effectively moving sideways. Now we thought last week we were going to get the explosive move to the downside. We didn't quite see that. We saw a strong pullback the following day, and we're just hanging around these kind of prices here. So we just need to see more from the gold market. The S&P is bouncing off its lows. You'll see the similar kind of price action really we're very close to all-time highs in the Dow Jones, and even today's sell-off has been met with a little bit of resistance. So we've seen a lot of structural failures and strong reversals over the course of the latter part of the European session going into the US trading session as well. So the UK 100, not much to see there, unfortunately. And the Euro Stoxx is experiencing a pullback as well. So that's the phase we're in. Actually, for a number of these markets, we're in sort of kind of choppy pullback phases. So these are the market conditions. So we can revert effectively to some of the markets that we've been looking at all morning. So we'll continue to just keep an eye on the euro dollar. We do like the pound dollar below the 29.57, so we might have to get into that again. We've already made a small profitable winning trade off the back of the pound dollar. Let's see if we can get into it again perhaps. And well, it's the Aussie dollar I'm looking for. And there's a very tight range just sitting in here, but let's see if we get a little bit of a rollover to the downside in the Aussie dollar, and we might see these markets continuing lower, as you can see. So we can zoom in at these levels and see if we get a couple of flushes to the downside. So we're looking at, well, what we need to see with the euro dollar is kind of a structural failure, something like that, which would give us strong potential trade to the downside. The level we can look for in the pound dollar is just this level in here, 29.57 roughly, and that same level in the Aussie just stacks up around 71.74. So that's what we're looking to do with these markets. I'm going to just look at the so again, the Euro Stoxx and the S&P are not showing any signs of kind of reversing to any great extent, so do bear that in mind. And just looking at this. So we can switch over to a smaller time frame in the Euro stocks, just reversing really, isn't it? It's just bouncing back off these levels. So maybe these are not necessarily primed markets for us today in terms of the US equities and the Euro stocks. So it might still be a case of focusing on the pound dollar. But we do want to see a close below the 29.57. That, just from a consistency perspective, is what we would like to see. And we do need to see a structural failure to the downside in the euro dollar. Something like that kind of price action. Because this is what we're concerned about, is a series of, so the market has been moving in our favor, and then we get this kind of reversal price action, and then we just get this slow minding price action that moves backwards. Now eventually we expect this market to continue lower, but what we're concerned about now is just the continual kind of explosive move, potentially back to the upside. So we're in an interesting position right now with some of these trades. So I think we'll just continue to look at and monitor these, the S&P, just to see what it's going to do. We have the US markets opening up at 2:30 in about an hour's time. So you'll see how these markets react to news once the market goes live. The euro dollar, so things are looking really promising for some structural moves to the downside today in the US dollar, and a lot of that sort of potential has been stunted now, which is obviously a bit of a shame. We do still expect these markets to roll over, but they certainly haven't performed as we would have expected. You know, like a pullback to this area in here, 29.57, 29.50 area, something like that, and then a rollover continuing lower is exactly what we would have anticipated. But you know, there's probably even slightly more bullish aspect now to the pound dollar than there is negative. So it does remain to be seen what is next for the British pound. So we only want to trade it in one direction, and we want to focus our energies on what that direction should be. And for us right now, it's still to the downside, even though price is reversing. So again, we want it to conform with our understanding of what we want to see these markets do, and obviously if that's not the case, then we don't end up trading it. So we're not flip-flopping, we're not looking to sell 1 minute and buy the next. You know, that's relatively incoherent. So we'd rather remain disciplined with our capital and be consistent in our trading decisions. Please do feel free, guys, to post any comments that you might have, or any trade ideas perhaps that you're looking at into your chat box. I'm just posting a comment now. Okay, there we go. So we've and for those of you that are online, you do need a YouTube account in order to, if you've got a Gmail email address, you can set up your trading account pretty easily, and then you can interact and you can post in the chat function as well if you wish to. So do feel free to post any comments or questions you have. This is an open, transparent trading environment. You know, and all of our decisions are made with complete transparency in our approach. So whatever questions you have, that's what we're here for. So I suppose we can continue to look at these markets just because we're very comfortable with the levels that we're looking to get in, and it's just a little bit below this level, but only by a pip or so. So that's the level, and you can see this price action really for the last half an hour, 40 minutes. It's just doing nothing really, trading between 29.68 and 29.57, so an 11 pip range in 10, 20, 30, 40, 50, 60, 70, 80, 85 minutes. We've literally been sideways moving with an 11 pip range. So again, that informs you in terms of the market condition. The reason why we don't mind that is often if you get an explosive move to the upside or to the downside, you're likely to attract buyers and sellers when price moves sideways like this. So it's not all bad. It's somewhat painful and a bit frustrating that we're not getting the signal that we need, but we're okay waiting for that. Patience is one of our pillars for trading. So I'm just making a note of a couple of these markets to price points for these markets. So I'm looking at the pound dollar. Maybe there's an opportunity to get into this again. We just took profit just at these levels here, just at the 29.68. And you can see that we've only just sort of poke through really. It was the spread that got us out of this trade, and then we've kind of moved sideways, and now we're threatening to push lower again. Right. Okay, so these are our, we're getting quite close to this level here, and the fact that we've got such a tight range here in the pound dollar, we don't want to preempt a sell trade. It does mean we've got a clearly identified stop loss just above this high just in here. So we've made a bit of profit on that trade already, but we would like to obviously get into it again if we can. We do want to be selling these three markets if we get that opportunity to do so. And that is the big question. Will it give us the opportunity to do so? So probably better to watch this on a 5-minute chart actually, and see if we get a structural failure on a 5-minute. There's potentially support around 15.32, and we're virtually there now, so we're likely to get a little bit of a flush to the upside in the euro dollar, at which point, you know, if we fail to make new highs, then we're very likely to get this rollover to the downside. Okay, so we can now sort of see the reason why we didn't want to get into the pound dollar above this level. and we would have had well, we're close to a structural failure above that level, so some strength coming into the British pound. So slightly choppy price action. We're certainly not going in the direction of the daily trend. It's a reversal pattern. So those traders that look for reversal patterns, that's a trade for them. We like to, just to clarify guys, what we look to do is to trade these markets in line. That's quite a strong move to the upside now, just blowing sellers out of the water as they look at this chart. With a considerable amount of strength creeping in as well. So let's see the pound yen. So the pound is probably strengthening across the board. Let's see yeah, it looks that way. So a really strong move in the pound, probably Brexit related. I don't know, I'm just speculating. Maybe if you guys are monitoring the news channels, you might find something along those lines. I'll have a look at myself now and just see what. So Boris Johnson says UK is facing a time of trial. Okay, clearly sort of Brexit related. Yeah, so we've obviously got the Conservative conference at the moment, so that is worth remembering. So let's get a little bit more information on that. Just see, not that it matters. Just to clarify, we are technical traders. We trade these markets technically. Obviously, when we get moves like this, we can. Boris Johnson calls on Tories to back Theresa May. That's an interesting position to take. Seems like he's been doing his best to do the opposite of that. So obviously his words and his actions don't really match an awful lot. But just going to see if I can get that information up again. Let me see. So we'll check this out now, as you can see. Okay, so just catching up with a few of the fundamental developments. I suppose one of the reasons why we do like the potential for the euro to continue lower eventually, and this is the potential setup that we're talking about here, except we are now just above the 1524, but there's that structural failure potentially to the downside, but we do have this level down here, the 1524. That's a strong level. There's a news event. Jeremy Hunt has said, from the UK, has said that the British people are very angry with the way that Europe have dealt with the negotiations. No, I think they've been fairly relatively consistent, really. But he's obviously trying to ruffle people's feathers, but I don't know to what avail. So there is a bit of opportunity creeping in at this level here. We go to the 1 minute time frame. So at this price we can take so there's potential for these markets to actually continue higher now, which is very annoying. So a breakout above this level in here is kind of a strong structural failure on a 15-minute time frame. The pound has extended higher. It's pulled back quite a lot, but a strong extension up to the 29.87, which coincides with this level in here. So a little bit of buying has come in off this level, and that's the problem. We're getting sort of structural failures across the board, really, aren't we? So we're close to that structural failure in the Aussie dollar. We've already seen it in the pound. We're likely to get it in the euro. So Jeremy Hunt has compared the Soviet Union with the European Union. So let's see what Boris Johnson has been saying. So Boris Johnson urges the party to back Theresa May by supporting her original plan. So I suppose the body politic will always remain the same, I guess. Not much changes really with Boris's actions recently. They don't seem to make much sense to his comments. Yeah, is this a leadership challenge by default? He's a man with a vision, but he doesn't have the lawmaker numbers in the parliamentary Tory party. He will have to hope this leads to a Brexiteer uprising. So obviously there's some within the Conservative Party in the UK that are interested in seeing things explode. Okay, so this move here in the pound is fundamentally driven. I suppose support of a soft Brexit plan means that it would be quite positive for the British pound. So we do need to bear that in mind. So, you know, if there's support in the UK for Theresa's sort of soft Brexit plan, then we're likely to see the pound increase in value. And if Europe kind of have their way and sanction to whatever extent the pound or the UK, and if there's a thoughts of a no deal and things like that, we're likely to see the pound rocket quite considerably to the downside. Right, okay. So there's fundamentals now kicking into the pound dollar. The markets are reacting to the Conservative conference in the UK. Okay, so yeah, lots of hi Renko. Hope you're keeping well. Lots of pairs at a 61.8 fib retracement level. Be careful. Yeah, what market are you looking at, Renko, and what time frame? Do you mind me asking? I know you said a lot of them, but any particular market in particular? We can certainly have a look at the pound on the daily charts. Okay. Okay, so there's the 61.8. We do need to change the color of this as well, of course. Let's turn it into sorry, that was just the in around the 23rd, 23% level, getting a rejection off that. Okay, let me get this indicator list. Yeah, so the New Zealand dollar, the euro dollar, the Aussie dollar. So let me just change this. Right. Right, I'm likely to give this a minute. It looks like I've just frozen the screen a little bit. I'm trying to get rid of the fib level. Yeah, and I mean the fact that we're retracing to that level is a little bit of a concern. Right, okay, so we are getting we seem to have frozen our trading charts. So let me take it away and I'll reopen it. So let me just refresh these charts if that's okay. So that's a bit better, I hope. Okay, so we're getting a bit of a rejection off this level. So so we can work with kind of an intraday swing high to swing low, and it's really strongly interacting with the 50% level. It's not much better, is it? Let me see if I can get a slightly better. So it's firmly, certainly the euro dollar is firmly pulling back from this level. Let's So there's that 61.8 level, just up at just that kind of high, and then we're kind of running into it again just a little bit. So yeah, you're just taking this momentum high to this momentum low, and there is your retracement. Yeah, good spot. Yeah, we've seen similar pullbacks on the New Zealand dollar and the Aussie dollar. You're absolutely right. So this is quite an interesting level. So this price is sort of trading above and below the 23% level. We've got the 38 just above it. So let's see if we get a break below the 71.74. We're only literally 5 pips away, so we can have that breakout at any time. But now we need to see whether it we can look at the Aussie dollar in terms of the ATR, 20 period ATR. So it's the trading range over the last 4 weeks, and we can see that there's a 53 pip average movement, and the difference between the highs and the lows is on average 53 pips. And currently we are 76 pips, so we're a decent sort of 50% increase on what the average has been over the last 20 periods. So are we likely to get much more continuation in this? Probably not now, would be our estimate. Probably not at this stage now. So so we'll come back and we'll have a look at it. So we still like this market to the downside. We still have the potential for the pound dollar to roll over to the downside still. Might look at this market just below the 38.2 level, which is the fib level. So we can maybe look for an opportunity to sell this market at that price. So really our attentions can kind of shift towards the euro and the pound. The US equities are just sort of doing their own thing. So too is the euro stocks. So still potential growth involved in that market. Yeah, so the 71.60 could be the bottom. I think that was the Aussie dollar. Yeah, exactly. So that was the level we were looking at, 71.61. So yeah, completely agree. And we've got a decent pullback in that market as things currently stand. Okay, so this is the euro dollar, the pound dollar. I am conscious of the time, guys. We do need to switch across to the live trade room again for the rest of the trading sessions. So please do have a read of our information below. we need to start seeing some structural failures in the direction in which we want these markets to move, and that's to the downside. And that would be a break below the 15.32 in the euro dollar. And that same level would be the 29.57 in the pound dollar. So so we'll have to look at those carefully, and we'll switch across now as well. We'll start looking at some other markets. We do have the US open stock market open in about 25 minutes, so we'll start getting prepared for that. And unfortunately, we haven't really had the opportunity to get into any trades this particular session, and we were in 4 trades earlier this morning. So again, it was looking quite promising for a very short window before we started seeing these markets pull back again, which is just a shame. We're just not really at the moment getting the follow through that we would like to see, but when that comes, we can feel the volatility behind some of these moves. So we'll switch across now to the live trade room, guys. Thank you as always for joining us. Please do give us a thumbs up or subscribe to our channel if you've not already done so, and click the bell function as well. You'll be notified when we go live, and on Facebook as well. Please do connect with us through our Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you very much for joining us. Do have a look at the information below, and if you would like to come and join us, you're very welcome to do so. We're currently offering a 14-day free trial, and if you decide to stay on board, there's only a charge of $9.99 per calendar month to access over 76 live trade rooms per calendar month. So hopefully you'll find it a really productive experience. On that note, thank you very much for joining us. Do take care, and we look forward to seeing you next time. Bye bye.